It's 2025, and we are going to take our first look at the charts for the year. I'm joined once again by Patrick Karim of North Star Bad Charts, and I'm going to be putting Patrick under pressure today because I'm going to get a few predictions out of him where we're going with metals, where we're going with commodities. We're going to have a look at a few other things. Patrick, welcome back to the channel. Great to have you.
Hi, Dave. Happy New Year. Thanks for having me on again.
Always enjoy it. We're going to jump straight in because, as I said, I'm going to put you under pressure and get a few predictions out of you for the year. Let's take a look at gold and see what the charts are saying.
All right. Again, yes, you're right. Always nothing better than to look at the actual chart. And because we just turned the corner on the new year, if you, ever you get a yearly defined breakout, it's like so important, right? Because a yearly defined breakout will set the trend for the upcoming 5, 6 years, right? When you get a breakout.
Yeah.
So here I have the gold chart since ever. Here we got a breakout here back in 2002. I'll just order the line here. Then we got another breakout here back in 2017 on the close of 2017. And gold actually had a pole flag confirmed breakout, not last year, the year before. So in the close of 2023, so January 1st, 2024, we actually had a pole flag breakout for gold, and it's practically reached that target, Dave. So it's just for gold for 2024, it was just a continuation of already a breakout that was
Mm.
done the year before. There's no new breakout. It's actually closing in on reaching measure moves. Look, that's what I tell people often. Gold is so beautiful that look at the run it had after that break on 2002 all the way to 2012. You can't even see the GFC, the great financial crisis, on the yearly chart. Like, fast, where is it? You can't see it. It's this one here. And you see, it's just a wick. The wick is the noise from the smaller time frames. But it
Mm.
actually closed green. Gold actually closed green in 2008, closed green in 2009, and closed green for how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For 11
11
years, it
years.
just closed green. And that's the beauty of a yearly chart. It's just, it removes all the noise, it's going down, the Fed's doing this decision here, this daily minutia, monthly minutia. Look, gold's been in an uptrend. It bottomed in 2016, but it's been an uptrend since 2017. So now we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years up, and we had only 3 years where it went sideways. Here a little bit red, here marginally red, right? It practically, and here flat. So it's only on its third consecutive green year in a row. It's just crazy. And that's in US dollar. If you do it in Canadian dollars, Australian dollar, that chart is just,
It's golden.
look, I'll do in GPD, Great British Pound. It's gold. Look at that. It's just, that's your purchasing power of the British people just going down the drains there. That's what it's telling you. It's the
That's from
British pound.
2006. I mean, look at that. From 2006 to now,
Oh,
2025. That is
I'll, sh-
just, that
I'll
is
show you
just shocking.
historically. I have more data. If I do times USD, fine. Check this out. Now I have it since yeah, it really bottomed in 99 and it's just been on a tear. Look how many red candles. There's one here,
Two,
two,
three, four
three,
red candles over that
four.
period.
Only 4 years in all that range that you had a drawdown. Imagine that's a
Yeah.
beautiful investment, beautiful for a stacker, for anybody. It's just people often they love the YOLO, FOMO, the gains, but for me it's more important how low, what's my drawdown like, that's for me more important. And you see that it hasn't happened, just steady as she goes, man. That is crazy. Then what
Pull,
are they
pull up the same
doing?
chart for me in euros, will you?
Yes. What are they doing in Great Britain? They're destroying the purchasing power. Euro, look at that. Same disaster.
Same story.
Same story. Just
99, we got an extra year out of it.
yes, look at that. Just one.
Two,
That one was
three.
pretty tough. That one for the year closed 31% lower, but that's it after that.
Yeah.
It's just up and away there for gold. So low volatility, just gains year after year. It won't outperform the stock market. It won't outperform Bitcoin. That's not the goal of gold. Gold is just It's an instrument that tracks pretty closely purchasing power, and that's what it does there. So it's in a beautiful uptrend. Nothing to see here. But maybe people are interested in what's happening to for gold. You got to check this out. Gold versus inflation.
Mm.
Because that's also another part. You say, okay, gold's going up, but is it outperforming inflation? Well, here is the gold chart priced in inflation. Yes, I know maybe inflation's bamboozled, but okay, let's deal with what we have. And often people say gold's below its high of the 1980 in inflation.
Not
Yes,
not hugely
intraday,
so. Yeah, yeah.
intra-month, intraday, intra-quarter, but on a yearly close basis, that didn't last very long, so it's less meaningful. On a yearly close basis, we had a breakout this year
Mm.
above the 2020 peak of gold versus inflation, the 2012 peak gold versus inflation, and above that famous 1980 peak versus inflation. So gold, this chart's more meaningful than the other ones we just covered. Gold has actually broken out versus inflation above how long is that? 40 years,
40,
45 years,
44 years into his
44
45th year.
year horizontal trend line. And if you want for the cup and handle guys, cup, handle, higher high, higher low. Now we have a higher high, confirm higher high because we're above a horizontal plane. It's This is generational stuff. This
Mm.
is probably one of the most important macro charts I review. Sometimes I put it on X. I don't mention enough. I'm happy maybe your viewers who never saw this chart. This is crazy, 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 crazy stuff there. It's happening right there. It it's a yearly breakout, Dave. So this stuff doesn't happen often there. You have to wait a
Yeah.
long time, and it happened. So the more you wait, well, it's just going to go like that. Well, it's not just going to go like that. So it's intra year, right? So you could have during the year, it could have a wick, right? It could come and retest this and then, but by the end of the year, the likelihood is it's just going to close green. It could have a wick, right? Let's say we have a great reset or whatever, a recession. It
Mm.
could have a wick during the year, right? That thing could come, it could be red in March here, right? That thing could be
Mm.
red, but where is it going to close the year? So these charts, you look at them once per year and you don't stress if it's red intra year. You just wait until it closes. You let the market forces do what they have to do because you see here, even in the GFC, it was red here. That candle was red all the way
It
here. It
was
was
one that,
scary.
yeah.
So you got to deal each time frame. You deal with it and you let it close. Because if you don't let a time frame's candle close, you're you're throwing away the advantage it's giving you of reducing the noise. You got to just let it close, let it do its thing. So
So
this is important.
what we're saying here, Patrick, is that gold, if it continues this uptrend, is going to outpace inflation,
Yes,
right?
yes.
So that this is we're measuring this against US inflation.
Yes,
Okay.
US inflation. So no matter if inflation is going up or down, gold is just outperforming it there. It's in a bona fide new yearly defined uptrend.
So it's
And this,
protecting your purchasing power, as you say. This chart supports the fact that it is protecting your purchasing power.
yes, it's tracking it. And why is this important? Because check this out. Silver, here's a silver chart. I'll put it on the log scale. I'll put candles, hollow candles, reset chart view. Look at that.
Right.
This is gold.
Yeah.
This is silver. Silver tracks
So
not
close,
gold
isn't it?
price.
Yeah.
It tracks gold's performance versus inflation. You could fit in whatever narrative why it does that. But
Mm.
for now, like as a chart trader, I'm always looking often people put the gold chart, silver chart, and then they draw a big arrow and they say, well, there's a catch-up move or something. Well, if you're always anticipating a catch-up move and the charts don't quite match up, it's because you're not looking at the more appropriate correlated instrument. So when I saw the gold versus CPI chart, and I said, my goodness, silver did the same thing. Silver, its 2012 peak did not surpass on a yearly close basis what it did it just about what it did in the 1980s. But if gold's breaking out versus inflation and silver, I know it tracks it, not to perfection there, but like from a bird's eye view, tracks it.
Mm.
I'm telling you, man, silver is also ready or has tailwinds as defined by that lower chart. And even silver on the yearly chart, let's just gonna get remove all those drawings. Just I'll pop up the silver chart bigger. Ah, goodness, why you want to move? Let's pop up the silver chart bigger. I'll show you what silver did on its own price chart. Yes, while it did not get a yearly defined breakout above that, what it did do though, it did break out of its congestion area here. So here you have
Okay.
another pull flag.
And we forget as well, you've got to remember when you say that because that congestion area, it looks quite small, right? But the reality is that's what, 4 or 5, that's 5 years.
Yes. Oh yeah, it's crazy. That's a 2020 silver squeeze, everybody going crazy. So yeah, you're right. So 2020 and now 2024, December 2024, it closed above it. So we did have a pull flag breakout confirmed for silver. It's done.
Hmm.
15 days ago. It's done. It's in the books. So that what that means is we did a yearly defined higher high than we did previously 4 years ago. So that there's an uptrend starting to morph here. If you want a bigger uptrend, then you need a higher high above that 2012 top. And by the looks of it, now it's still early there. It's moving up, but like I said, there it could go down intra-year, it could be a red candle. But because
Sure.
the gold did it, you got to say, look, gold didn't break down. Gold's a leader, so it's opening the pathway for silver to also do the same. And if it does that by the end of this year, if silver gets a close above this congestion area here, goodness, then that's a historical breakout.
Yeah.
Historical,
And this is the
historical.
thing, like, because people look back at the, at the 70s and they see, and they talk about $50 silver in the 70s. They got to remember this back in the Hunt brothers' time. Got to remember that that was intra-year, that didn't close out at that intra-year. So, and the same with the more
Yes.
recent high when we got back up to what was about 49 dollars. Again, that was intra-year. So if we closed above, and what's that level there that the annual close is in the kind of 30s, low 32s. So if we close the year, and we are only in January, but if we close 2025 above that level, that's a historic annual
Ah,
breakout.
it's massive, massive, and a cup and whatever. Like some people, they attach a lot of emotional meaning to a cup and handle because most new traders, that's like one of the first things. Oh, a cup and handle, you're always
Mhm.
looking for it. But the way I see it, a cup and handle simply means that I have a higher high, a higher low, and I have a shared neckline, and the close above it means a higher low, the beginning of an
Yeah,
uptrend, and then a new higher high. That's just a new channel. It's a new uptrend. So there's nothing magical or mystical about a cup
sure.
and handle. Like, some people say, oh, I can't go down more than 30%. Like, I don't care about that. Is it doing a higher high? Yes. A higher low, sorry. Higher low, yes. Then as soon as I get that neckline breakout, it's off to the races, man. It's like generational stuff. So for stackers, this is important, not for traders, because the yearly chart, goodness, like I said, it could go super down intra-year. But for a stacker, which already doesn't care about the price,
Mhm.
he could sleep even better at night knowing that, you know, it's the trend is up.
Yeah.
Not down. I don't know. Some people are calling, whatever. Uh,
So
the
here
trend's
I'm gonna put you on the spot. Are we gonna get that new all-time high annual price in silver in 2025?
it looks like it. It looks like it. So what could happen now is a move up, some type of market sell-off or whatever. Hopefully it's not too deep, maybe in March, whatever, and a huge drawdown process, possibly intra-year in silver. But then we get a rally and close back above 32 solidly by the end of the year.
Okay.
So that's a scenario. Look, I'll do it on the daily chart. Even maybe the monthly chart. Check it out. Let's see if this is possible. Remove drawings. I'll put the candles. So let's do an imagined roadmap.
And we know how silver behaves when it starts to get the bit between its teeth as well. Uh, moves can be moves can be fast.
Okay, it's 25.
This is interesting. While you're looking at a measured move here,
Like, because silver on the monthly chart still needs to close above 32, 34 to get going. It's not it needs to get through that. So I'm wondering if maybe we get a spike here, a close on
Mm.
the monthly, still back below that. Then we get whatever the recession eventually, like whatever we get it. And after that, close the year. I'm just trying to see if it fits by, it has to be before December. That's December. And by the year, it would close back above it. And that would be the breakout, right? That would be, so can it do that? Oh goodness, maybe not.
So is that your
Maybe
call for the end of the year now? You've got a figure there close to 40
it's
bucks.
we're close. We're closer to it. You got to think about it from a statistical way. We're at 32. All silver has to do is hang around this price. It's like if it'd be at 15 and you ask me that, I'd say that the probabilities are low. If it's at 20, I say okay, maybe a little bit more. But now it's above an inclining 12-month moving average. It's above a 3-year moving average. It's getting a little bit stretched from the distance from 3-year moving average. So, you know, ideally is look, yeah, it's possible. And even let's say it does go up here, it could even just do that retest from above,
Yeah.
and yeah,
So
it's
you heard it
100%
here. You heard
possible.
it here first. Patrick Karim is calling for 40 bucks in silver in 2025.
Oh goodness, I did not say I did. I don't think I said that. It's a possible roadmap, but it's those lines, Dave. The if it closes above those dotted lines,
Yeah.
yes, that it's then that becomes a resistance, becomes support, and of course you got to look higher, right?
So that's
So
close. That's a monthly close above those lines, and you're looking at kind of
30,
30. What are you saying there? 34,
yeah, 34.
34, 35.
That's the again, a chart trader's role is not to call tops or bottoms.
Mm.
That's hero stuff, Hail Mary stuff. You only know in hindsight. Our goal, a good chart trader, would be able to identify the more meaningful lines, which tells him that the probabilities have shifted more in favor of an uptrend or the downtrend or resumption of an uptrend. That's my job. And for me, this line here is super meaningful here because that was a blow off top,
Yeah.
support, resistance, resistance. The echo bubble was not able to close above that. So for me, that's even here, you have a little wick there. So for me, that's a super meaningful level. A solid close, 35, thirty-five,
Yeah.
50. It's,
Yes.
we're good there.
All I heard was 40 bucks for the end of the year, Patrick.
Well,
To go back to gold there, because we didn't I didn't pin you down on a end of 2025 gold price before we move on to other matters.
this is the issue of gold. Gold is stretched, stretched. This is gold above its 3-year moving average. Look at that. Statistically, it's in the it's stretched from the moving average, so it could still go up in price and have an aggressive type of consolidation, a little bit like it did here.
Mm.
So I'm just going to put a vertical line here. See here, it was stretched, super stretched. The price did went up, but because didn't go up as fast. It let the moving average catch up and giving it a second breather to go up again. But now it's stretched, so there's 100% no low risk entry. If the trend was to maintain itself, it's pretty easy. Well, not pretty easy, but if you want to see what could happen during the year, I'm going to put where's my end of year marker? 2025. That's the month. So this is the playing field we have, right? If somebody would
Hmm.
draw this, okay, outlier. If that pole flag breaks out, yeah, you could have, yeah, this would be logical. Because what happens here, I like using measured moves. Even here, gold already it stretched and it did a measured move. So you got to be very, very wary of that. So we had this huge breakout back in June of 2019,
Hmm.
breakout consolidation. So a classical TA measured move, target practically reached. So and you're stretched. So the probabilities of these pole flags of resolving always upwards, they diminish in time. The further you are stretched from more important means. So maybe it's going to consolidate a little bit more here. We're not out of the woods yet here. Oh goodness, it's not looking bad there. So if that breaks out,
We've got another potential.
yes,
But we could
well,
see a bit of we could see a bit of consolidation before that happens.
yes, but if ever does move up now, like that's the target that's the
Yeah.
move that's going to bring you much higher there. Because now I'm probably gonna have to zoom in the smaller time frames there, but
So if we break out on that, you're targeting somewhere about 3,300, 3,400
well,
potentially.
Hold on, I'll do it this way here. So I'm zooming in on the daily time frame just to get
Mm,
more granularity. So this looks like a breakout on the daily chart, actually.
yeah.
From that slanted line, of course, there could be some horizontal resistance, but it's looking that's the breakout. So that's probably the move that brings gold to 3,000.
Mm,
And if it does it, that's way before the end of the year because usually the angle in is the angle out. So that brings me, goodness, like in a Q at the end of Q1 there. That's crazy.
yeah.
Imagine that. So gold in the shorter term, yeah, it has a chance to hit 3,000 this year for
Okay.
sure.
Okay. All right. And closing out the year, where are we going to close out the year? Because we'll be back chatting
Well,
at the end of the year. I'm gonna.
yeah. So again, so pull flag. Look, if it keeps just trending upwards, I'm going to do a rising trend line there. So we'll assume that the trend is your friend and it just keeps rising. Where's my end of year one? September, October, November, December. There we go. So yeah, it could be 30.
You could be seeing three. You could be seeing 3,500.
Yeah, yeah. Even maybe higher. It's crazy.
Awesome.
If look at that because you could go, let's say you do that, then you get a flag here over the summer. Then you could get another rally. It could go up here and then could just bounce here.
Yeah.
That's just a support line, right? The price could have go way higher.
Mm,
But yeah, you could yeah, 4,000, 3,500, 4,000 possible this year. It's crazy. I
right.
can't believe I'm saying that, but it's true. It's there. Look, it's an uptrend, right?
Indeed.
There's
Here, let's pull up the stock markets. One the US, one the main indices in the US, and let's have a quick look at that. And then I wouldn't mind actually touching on oil and uranium as we
well,
talked
this
about.
the yeah, I've been looking at the SPX there. Check it out. This is the issue of the SPX. It is stretched. So here's the
Yes.
monthly.
So
Look
when
how
something
stretched.
like this gets stretched, it becomes an awful lot more vulnerable to short term, to bad news
Yes.
cycle as well.
Yeah,
Uh,
100%, because the news is fit upon the price action, right? Because there's one news event they talk about, but the price constitutes of all news events, known and unknown to us, to whoever, right? So, but yes, they'll be able to tag because sometimes you have the bearish news in an uptrend, nobody
mm,
mentions it, but as soon as the price goes down, oh, it's because of that. Well, hold on, that bearish news
was
was
already
still there
there.
before.
We're
It's
just paying
crazy
attention
what
to it.
but look at that. It's stretched. So that again, no low risk entries. It's stretched.
And we had the
Stretched.
pullbacks that we've had since probably 2000 and what is that, 15, 16. The pullbacks we've had have been very, very short. Very, very short.
Yes, there's nothing look at that. That's a short one. So here correction. That's an aggressive upwards correction. Here we had that correction. But look, when we're stretched, that's usually when the corrections happen. And often it's being stretched, but losing the rising momentum. It's not just being stretched, it's really like starting to falter. And once you falter, then you go into correction. Here in the 2000s, you got a huge correction. So you can't, it's an uptrend. You can't be bearish.
Mm,
Just say, I'm bearish now. You're above an inclining 12-month moving average, above an inclining 3-year moving average, but you are vulnerable and there's no low risk entries. The low risk entries are down here. And you've had some measured classical TA measured moves. I always like guys now they're witnessing like my checklist of stuff there. Like, look, it's pull flag, target reach, stretch. Like, what do you? This is like the steam roller thing. I'm telling people are picking up the nickels in front of the steamroller. It's yeah, because the steamroller is it's super far away. It's in maintenance mode when the price is down here and exploding. But the higher you go up, the steamroller's starting to catch up now, and eventually it's gonna squish you over. So now the bulk of the gains was this here,
mm,
the 50%. That's the bulk. So even if it does go up another 20% or even 30%, the bulk of the gains, they're not here. They were
there.
in the rearview mirror. They're in the past, the bulk of the gains. So this is omnious. Uh, look, did you see even the financials aren't looking is it the financials? I forget which one. Yeah, the financials. XLF. Look at this thing. Super stretched. Again, financials are super stretched. But if I look on the daily, they're starting to move up again. Okay. It's not that bad though. That's good hope there for them there. So on the daily, there's a rally happening right now in the financials. Look at yeah, the financials are doing not bad, but it's stretched. So I'm very wary of the rug pull. Which one was it I was looking at? Was it Microsoft? Yeah, look at Microsoft. Remove all indicators. I'll put on the line chart. It's like below that line.
It's no man's land.
It's yeah, look at that. It's like it's slowing. The momentum's slowing. So
Yeah.
stretch from the moving averages and slowing down momentum on the daily chart. Um, I even have my breadth indicator for the SPX.
Mm.
So we see here is the percentage of stocks on the SPX above their 200-day moving average. And here is power mode, but look at that. Look at the breadth, how it got destroyed here.
Absolutely destroyed, didn't it?
Destroyed. The price still going up because a lot of the
Yeah.
money is going into Mag 7, whatever, but look at the breadth. So we're almost at parity. Like we're at
Yeah.
55%. Only 55% of the stocks in the SPX are above their 200-day moving average.
Well,
Only, and that's
that's
when you're,
suggesting an overweight on the larger
yes.
stocks.
And look, that's when you're vulnerable for
It's a
a
massive concentration in those few
yeah.
stocks.
So you see, that's like that. Those are clues. This is a Nasdaq breadth deteriorating
Mm.
in a very bona fide uptrend. You would want the breadth to be increasing,
Yes.
not decreasing. That's bearish divergence, right? Higher highs, lower highs.
Mm.
It's not. And I'll do the Russell Nasdaq, the small caps, same thing. The breadth is not marvelous. It's like the
No,
breadth.
it's
So
deteriorating further. Yeah, never really started
that's
performing well.
those are clues I look at. So yes, uptrend, but is it a low risk entry? 100% no. I'm
Yeah.
never like I don't care if the price goes up 10% after we have this call or 20%.
You're
It
happy
doesn't
to
matter.
you're happy to miss that because you think we're
Ah,
extremely vulnerable at those levels.
I don't care. Yeah, I don't
Yeah.
care.
The other yellow metal,
Ah, yes. Which
uranium.
ah yes,
We
okay,
don't
let's
talk
go.
about it much, but the odd time we do. And it's had an interesting time over the last couple of years. And this looks like a very interesting chart.
Want to look at the metal or the let's look at the metal itself, right?
Yeah.
It's having so much trouble. That thing looked like it's yeah, it's still deflating there. Goodness gracious. Look at that. Look how stretched it was. I remember here at
Mm.
100, people were talking 200, 300, right? It was crazy, the bullishness. But that really looks like a blow off top. Look at uranium. Rising momentum. I must have trained you properly, right? You know now the low risk entry was somewhere down here, right?
Yeah.
Right? Coiled and tight. Even here, oops, even this one here, Dave, not this one, even here, I could have probably called the top here or called a, because that looked like a blow off top, but it got a second leg and it happens. And that could happen in the stock market also, like some crazy stuff, because that it was already stretched here. Now it's stretched some more after reset. But look at that thing now. Now here it barely lost the 12-month moving average. Now it's completely lost it. Stay like it's like the next support is that 3-year moving average. If that doesn't hold, it's sayonara.
Corrections.
Oh boy, there's that line. Yeah, it's not. Oh, I think it even lost that. Yeah, it lost it here. Lost the rising trend line, lost the 12-month moving average. The momentum is completely resetting, but sometimes there's so much damage done that it doesn't V-shape right away, right? You need some type of
It's gonna consolidate for a while before it starts moving higher
yes,
again. Yeah, yeah,
yeah.
yeah, yeah, yeah,
So
yeah.
it's not good. It's not even. It's still going down there. It's crazy, man. That
Mm.
thing. It looks like a bubble that popped there, and that's a log scale, right? If I put
Mm.
that on the, oh no, it's linear. It was linear. Okay, there's not much. No, sorry.
That's all
Yeah,
right.
here's on the linear. It looks even more bubblish. Always log scale. So yeah, the move looks done there. It's been done for a while actually.
Oil.
Yeah.
Let's finish up and look at oil.
Which one? Oil?
Oil, yeah. We're floating around $80 at the moment.
So oil is hanging in there. Again, you have to wait for the close of the month, right? Sometimes I know some people are drawing it. You see,
So this is
intra-month.
a month. This is a monthly chart now. So what we're seeing is currently we're above that monthly close, but we have to wait until the end of the month for that to
Yes.
actually be in to be a legitimate print on the chart.
That's
But
right. And
what you're saying there, though, is that if oil was to close at this level at the end of January, that's significantly bullish, wouldn't you suggest?
well, if here that's just that descending trend line just tells me that the downwards momentum has halted. So
Mm,
it gives you a chance to go sideways and up.
mm,
Halt the downwards, then you got a chance for sideways and up. And the up is again, it's when I do the higher high. It's above 84 there, above 83.70, above that 3-year moving average. If we get a close here, then it's go time, buddy. Then
right.
I'm gonna empty my swimming pool, 60,000 liters of water. I'm dumping oil in there, man. Dump it, dump it. That's because you know what could
I
happen here
believe you.
is, or because it could just you're still trapped below here. There's opportunity cost. You don't know how long. You know, sometimes there's even a retest of these lines. It could even retest down here.
So we could be in a kind of consolidation or a retest for a while before we see emptying. But
Yes, we've
you're not
happened.
you're not
Yeah.
going near that on the upside until it breaks that kind of you've got 83.67. So about 84, a close above 84, that's when you're going to start
Yes.
looking at that as an entry
Yes.
point.
There's
Yeah,
some
very
good
good.
looking oil companies there. There's something happening there. The setup's there. Just got to
Mm.
let the
Let it
market do
unfold.
its thing there. We're
Yeah.
still early here. So what you
And
do
just
is yeah.
last one. Bitcoin.
Okay, it's right here.
Give
So
us your
big
take on Bitcoin. We had some explosive moves in 2024. Are we going to see the same, or are we going to run out of steam?
let's look at the evidence. Here was a pull flag, another flag. So let's see, let's look at these measured moves there. Have
Mm.
they been reached? So here is the measured move. So there's still room here. So
I
now
was
we're
going to say, it
halfway
doesn't look
towards,
like it's been reached. Yeah.
yeah, there's still juice in the gas tank.
And where's that level? That's significantly higher.
150,000.
150,000. So we could see a 50% increase from where we are.
So this is another trick. So there's measured moves. Then how far am I from that 3-year moving average here? So let's say it would go bonkers like right away. I would need to be stretched 232% above that 3-year moving average to reach that. So I go
Mm.
back here at the bottom and I want to see if it's really if it's done that in the past. So if I go down 232, so yeah, there's room there, it's possible that if the price explodes, there's still room for it to be able to distance itself from the moving average to reach it. There is a wall here. You got to be aware of that. Resistance, support, now it's become resistance. It could stop right there, you know. So there's halt, a refresh, a reset. But that move, there's 100% still energy. It's halfway there, but we're entering the second leg. So as
Mm.
soon as this resolves, let's see the daily chart. Remove drawings.
And the lower chart, just for the lower chart, is the distance from the
From the
what's
36 period moving average. So whatever is
okay.
here, I'm back on the daily. So the 36 period moving average is that orange, that red line. So that's how stretched I am from that moving average. It gives you, it's like a FOMO gauge. Like the more stretch you
Mm.
hear, see, it was stretchier, people were probably calling crazy stuff. So even if the
Yeah.
price did went up, it did go sideways and down because you're like just historically stretched. See, when you're stretched here, the price went sideways and down. It's just mathematical, right? Doesn't mean the price can't go up, but it would maybe need a reset. But now the reset's done because you're not stretched anymore from that moving average. So if you wanted to go up, it could probably do it here. So there's maybe this line morphing into existence, and any close above that would probably really help it continue its move upwards to
Mm.
that higher target. Let's say here, pull flag, yeah, 145,000.
Mm.
So it's close. It's close to doing it again, but it's probably going to need some closes above 102 a few times, a couple of days, and then after that, so it's resetting. Second leg, it's in the second leg of its journey upwards. It's an uptrend, so you can't really you don't short it. We shorter term traders probably have an entry real soon there.
Mm.
If that flag resolves, but it's the flag, you know, it's the lower, it's those flags of the daily chart that occurred at the same time when the monthly chart was not stretched at all there and just breaking out. Those are the ones you want to jump on.
It's always fantastic chatting to you. I learn something all the time. I'm gonna we'll be checking back in a couple of times throughout the year, but at the end of the year, we might have a look back and see what your calls are, what the predictions are like. It might be prophetic, or it might be otherwise. But we'll have fun seeing how things unfold. Patrick
Yes.
Karim, North Star Bad Charts. Thank you for joining us on the channel again.
Thanks, Dave.